And we have none other than Karan Batra, founder and CEO of charteredclub.com, a very well-known blog, especially among chartered accountants. And Karan Batra himself is an all-India ranker of chartered accountants. Karan, this is news for me as well. I just read it on your blog, and compliments to you. I know that's one tough exam to crack. So folks, it's a golden opportunity to get your questions and queries on taxation answered by an all-India ranker of chartered accountants. Well, let's start off that first. And Karan, let's talk about setting the context. In the previous budget, there was this one bonanza that was given by the finance minister, and that is talking, of course, only about real estate, that the second property that a person, an individual may own, may no longer be considered as notional rent. It cannot be deemed to be let out property. That can as well be considered as an SOP. So that as well has been an added benefit for home owners. But let's start off by setting the context. Like I said, what are the other benefits available? Let's start off first with if you are a home owner. What are the sort of benefits available in the taxation laws right now? And if you've taken a home on a loan, what are the taxation benefits available?
So Mubina, there are various benefits. The first benefit is when we buy a property, we pay stamp duty. This stamp duty can be claimed as a deduction under Section 80C. Moreover, if you've taken a home on loan, there are various other benefits as well. When we repay the loan, the principal part of the home loan repayment, that can also be claimed as a deduction under Section 80C. Moreover, the interest which we pay, that can be claimed as a deduction under Section 24. So we can claim the principal part as well as the interest part. Apart from this, there is another benefit which is most of the times overlooked due to lack of knowledge. That is the benefit of Section 54 and 54F. It says that if we sell any asset and buy a house, then the gains from the sale of the previous asset are tax exempt. The previous asset can be anything. It can be gold or a house or shop or land. So if I sell any asset and invest that money in a residential house, my gains are totally exempt. My tax becomes zero.
Okay, all right. So yes, that is if you have bought your home on a loan, so you can claim the principal as well as the interest on various sections. Now let's talk about if you are paying rent. If you are not yet a homeowner, hopefully you will soon be, but yes, you are living on rent. So on that note, Karan, then what are the tax benefits available to a rent payer?
So if a person is staying on rent, either his employer would be giving him some HRA or he would not be giving HRA. So if the employer is giving HRA, this can be claimed as an exemption and the HRA received would become tax-free. Moreover, if the employer is not giving the HRA or if a person is self-employed, in that case he can claim a deduction under Section 80GG and this is of 60,000 rupees.
Okay, so yes, watch out for that HRA component. A lot of you guys may be having it in your Form 16s as well, which by now, by the way, your employers should have given you. So that as well is a benefit that's available, to individual assessees. Okay, well, it's time for our Ask the Money Show segment. Like I said, our phone lines are open, 24990388, or you can email us right now, themoneyshow@etnow.tv. Take your pick. Of course, we'll always prefer a phone call, a little more swifter. But yes, think up your questions, and yes, we have Karan Batra ready to answer them. Well, our very first question is coming in from Shriram. It's via email. He says, my wife and I are both salaried employees. We have bought a house jointly, have taken a loan for that. Both of us proportionally pay EMI 50-50. His first question is, do interest tax benefits get split equally? And secondly, he wants to know, I earn more than my wife. Can we make adjustments to the EMI payment for me to get more tax benefits? Interesting questions there. So yes, in such a scenario where the loan has been taken jointly by the husband and wife, how does the entire interest bit work out? I mean, how can they claim benefit for the same and for the principal payment as well, for that matter, because obviously the EMI is split equally between the two. So principal and interest as well will be split equally between the husband and wife. So Karan, how should they claim benefits? And also, if this is the scenario where he's earning more than his wife, could they rejig the EMI payments schedule between the two of them?
So with respect to the first question, that is the interest deduction and the principal deduction, these deductions are per person and not per property. So if there are two co-owners, both of them can claim these benefits, and the limit is per person. So husband can claim 2 lakh rupees for interest benefit, and the wife can also claim 2 lakh rupees for interest benefit, making it a total of 4 lakh rupees. For the principal repayment as well, 1.5 lakhs the husband can claim, and 1.5 lakhs additional the wife can also claim. So both of them can claim the deduction. Coming to the second part, if the husband is earning more and he wants to pay a higher EMI so that he can get a higher tax benefit, yes, he can do so. However, there are certain things which he should keep in mind. Now, what happens is when a husband and wife buy a property, in most cases they don't mention the ownership share. In such cases where the ownership share is not mentioned, then we should do this reached the courts, and the court said that the ownership share would be determined on the basis of the payments made. So when the husband is making a higher share in the EMI, he is making a higher payment towards the property, and the ownership share will change from 50-50 to maybe say 60-40 or 70-30, which is absolutely fine. But what he should take note of is, if it is increasing, say for example he is making a higher repayment, and the after all the EMIs are paid, this reaches 60-40 or say 70-30, this ratio should be maintained in future. So say for example tomorrow he is receiving some rent, it should be received in the same ratio, that is 60-40. If he sells the property, tomorrow there are capital gains arising, then again it would be in the ratio of 60-40. So in such cases, the ratio in which the payment is being made, that would determine the ownership structure, and it will change from 50-50 to a higher component being taxed in the husband's ITR and lower in the wife's.
Okay, so that's essentially what Karan is recommending when there is joint ownership of home as well as the loan taken to buy that home. Okay, next up we have Krish Thakur, who has sent in a question. He says, can I withdraw my provident fund and pay off my home loan with that money? Now, he's not mentioned how much is of both, but I'm assuming it's full repayment or partial repayment. Any which ways, he wants to know, is it a good idea from a tax point of view? What would you advise, Karan?
Ravina, strictly speaking from tax point of view, if I see the interest that is there on PF, it is around 8.5 to 9%, and this is tax free. Whereas on the other hand, the interest that he would be paying, that would be around say 9% or 10%, but he would be able to claim a tax deduction. So after tax, the interest that he is paying, it will turn out to be somewhere around 7%, because he is able to get the after tax benefits. So if he is getting 8.5 to 9% on the PF part, and he is paying only 7% after tax, then I don't think from tax point of view it makes any sense to get the money out of the PF and repay the loan.
Okay. Yeah, based on the returns as well, and from the tax point of view, it does not really make sense to withdraw your PF and then pay off, your home loan. That's what Karan is advising. Okay, we have Atish Bhanu, who has sent in a question. He says, I bought a home in 2018 on loan for my usage. However, due to change in circumstances, I still live at my parents' house. But to earn money, or rather additional money, I have put it on rent. I'm assuming the home that he has purchased via loan. The monthly EMI is more than the rent. I am not able to cover EMI payments. How should I show this in my return, which I have to file on 31st July? So all of this, basically, the taking of the loan as well as the giving it out on rent has happened in 1 year, 2018, and I think net basically he's making a loss on this house property. So Karan, how can Atish show this? And of course, the other question is, can you set off this loss that you are making on your house property versus your other income?
Yes. So firstly, irrespective of whether that's a profit or a loss, it is mandatory to report all transactions in the ITR. So in this case, what will happen is the rent that he is receiving, this would be disclosed in the ITR as income under head house property, and he would be able to claim some deductions from the rent that he is receiving. He would be able to subtract the municipal taxes paid, he would be able to subtract a standard deduction of 30%, and he would also be able to subtract the interest component of the EMI. So first he should contact the bank to give them a breakup of the EMI on how much is the interest and how much is the principal. The interest paid would be claimed as an expense, as a deduction in the income under head house property. Now in this case he is getting a loss. This loss can be set off against other incomes. So the loss that we are getting from house property, that can be set off against other incomes. If due to some reason we are not able to set off this loss in the same year, it can even be carried forward to the next year and can be carried forward for 8 such assessment years and set off whenever in future we have any income.
Okay, so yes, set-off is allowed. In fact, you can carry it forward as well for 8 years if you still have some loss left in your house property. Okay, we have Sanjeev Kumar Singh who has just emailed us. He is from Jabalpur, and it's not a housing-related query. He wants to know if someone's taxable income, considering the exemption of PPF investment under Section 80C, is below 2.5 lakh rupees for 1920, is he obliged to file an income tax return? Karan, your view?
It is not mandatory in this case. However, we would advise that they file the income tax return, because tomorrow if you have to justify where did you get the money from or anything, you have the ITR. Moreover, you are informing the government that yes, you are accumulating some money and that is non-taxable. That is why you're not paying the taxes. So what will happen is, say for example, he does not file the ITR and keeps off earning say 2.5 lakhs for say 20 years. At the end of 20 years, he has 50 lakh rupees. But the government does not know where he got the money from. So tomorrow if he buys a property, there may be some issues. So it is always advisable that you file the return so that you are reporting the data to the government.
And also don't forget, a lot of government work, even for that matter, visa applications do require income tax returns. It's just a very simple process. Literally with now, even the income tax authority is getting smarter. They will pull out all your data from the form 26A. So you just literally have 3 buttons to click and you are done filing your income tax return. Of course, more on that as well on the Money
Show. Even for a credit card or when we buy a property, it is required.
Okay, so yes, for every service that you would like to avail, you need your ITR. And you know, Sanjeev, very simple process. It'll literally take you no time. Okay, Karan, before I move on to my next segment, we just have 2 days to go to the budget. And let's say I give you that golden chance of sitting down with Finance Minister Nirmala Sitharaman and sharing your wish list. What would it be?
So one would be, I would recommend that they increase the interest on a home loan from 2 lakhs to say 2.5 lakh rupees for 2 reasons. One, the economy is under slump and the real estate is also going slow. So what happens is when there's a real estate boom, it creates employment. Considering that the economy is slowing down, a boom to or robust to the real estate sector will increase the employment.
Okay, so yes, from 2 to 2.5 lakhs, we won't complain even if it's more than that if the finance minister is listening. But yes, at least a hike basically on the deduction that's allowed on that interest on home loan. For now, it's only 2 lakhs. And by the way, it was changed by FM Jaitley from 1.5 to 2. Now, of course, we would like it to be increased further. On that note, Karan, thank you so much for joining. It's always a pleasure getting on board your opinion and your take. And of course, we're just 2 days away from the budget. Let's see if it brings on board any sort of housing SOPs, any sort of tax SOPs as well for the taxpayer. We will continue this conversation tomorrow. We will be having the budget hotline. For now, quick break right here on the show. But when we come back, if you're listening to this conversation and you're pretty pleased with what the government is offering you in terms of income tax benefits, especially for first-time home loan buyers, you want to stay tuned for the next segment because we are going to be talking about the top trends in the real estate sector across the country with Anuj Puri. He is the chairman of Anarok Property Consultants. Stay tuned for that.